let's bring on our next guests. We have John Arbuthnot, the co-founder, president, and chairman of Delta 9 Cannabis. Good to see you as always, my friend. And Jamie Krug, partner and chief quality officer at Century. Jamie, it's good to see you again as well.
Thank you. Thank you for having us.
Our pleasure. You guys go for it, and I will.
Thank you. So yes, as you said, I'm here today with John Arbuthnot, co-founder and president of Delta 9. Delta 9 is a vertically integrated cannabis company and one of the oldest licensed producers in Canada. So John, before we jump into our topic here, why don't we first spend a few minutes on background? It would be great to hear a little bit more detail about segments that Delta 9 is operating in, as well as the growth you've realized over the past few years.
Yeah, absolutely, Jamie, and thank you for having me on today. Full background on Delta 9, we're one of Canada's oldest cannabis companies, originally licensed in 2013. We became the fourth licensed commercial producer of medical cannabis under the previous Health Canada, medical marijuana program. Early years of the company were quite modest as a small, privately held licensed producer distributing medical cannabis products to authorized patients across Canada through a mail order program. 2017 became the real growth year for us. We raised about $10 million privately throughout the year and listed our shares on the Toronto Venture Exchange in November 2017. Since that time, we've raised almost $90 million through a mix of debt and equity to fund the expansion of our three main business segments. First business vertical for us is the Health Canada licensed cultivation, processing and distribution business. So we operate an 80,000 square foot state-of-the-art cultivation facility here in Winnipeg, Manitoba, Canada. Principal focus is on cannabis flower production. We also manufacture cannabis pre-rolls, ingestible oils, cannabis vapes, and a limited line of concentrates. And then we distribute that through our network through 6 provincial provinces here in Canada. So it gives us coast-to-coast reach, upwards of 25 million Canadian consumers across those provincial markets. First business vertical, again, effectively cultivation, processing, and distribution. Secondary to that is retail. We very much believe in vertical integration into the retail space, into the direct-to-consumer segment. We operate 12 bricks and mortar retail stores across 3 Canadian provinces and expanding that chain over this calendar year to up to 20 operating stores. We also operate direct-to-consumer online in provinces that allow for that. So 2 of our provincial markets and participating in the direct-to-consumer online through that vertical integration strategy. Third business segment, which I know we'll touch on in some detail today, is our business-to-business segment. It's effectively an infrastructure segment. So what makes us unique on the cultivation side of our business is how we grow. We use small modular containment units that we call grow pods. We've started to commercialize this segment over the last few years, selling these grow pods to third-party operators in Canada, more recently bringing that business to the United States. We also provide consulting and licensing services to other licensed and pre-licensed cannabis operators. We provide standard operating procedures, sanitation programs, really providing that kind of turnkey platform for cannabis industry operators to get in, to get licensed, and to get operating in the cannabis segment. In terms of the growth of the business over the last few years, it has been quite aggressive. So when we listed our shares publicly in 2017, I think we had annualized revenues of about $1 million. The year after that, legalization in Canada occurred. We did $7.6 million. 2019, we did $32 million. 2020, we did over $52 million in top line revenue for the year. So demonstrating the significant growth curve that the company has seen in the wake of federal legalization here in Canada. Company shares now trade on the main board Toronto Stock Exchange under the symbol DN. We also trade over the counter on the OTCQX in the United States under the symbol DLTNF.
Great. Well, I appreciate that background. It's really helpful. So, for discussion this morning, we'll be focusing on cannabis companies similar to yourself who are looking to enter the U.S. market. Delta 9, as you mentioned, has entered the U.S. markets through the capital markets, listing on the OTC, as well as operationally by expanding your service offerings. So John, as you were contemplating both of those moves, which one came first for Delta 9 and why?
Yeah, so for us, kind of, first moves, south of the border, we're really focused around the capital markets side. Very quickly on the heels of listing our shares on the Toronto Venture Exchange, we look to go through the process to list on the OTCQX, so the senior OTC exchange. Now, as a foreign issuer, you'll notice our stock symbol is DLTN and then ending in F as a foreign issuer. Really not an overly complex process when you are a TSX Venture listed company. There's a lot of equivalent reporting requirements, audit requirements, et cetera. It's walking through that process with the exchange to become listed. Obvious goals there, increased exposure to U.S. Investors, particularly U.S. retail investors, increased exposure from a capital market standpoint to, the obvious very broad U.S. market that can bring significant attention to from a capital markets perspective. So that was the first move. Secondary to that, obviously, we've seen some organic transition in our business segments toward U.S. market. Obviously, a lot of excitement around the U.S. market on a state-by-state basis over the last number of years, as certain states have legalized for medical or recreational purposes. Some issues and challenges around how we then are able to participate in the U.S. market from an operations standpoint. And we'll touch on that a little bit more again as we roll through the questions here. But yeah, it's really been that kind of organic growth and expansion both on the capital markets and on the operations side for Delta 9 into the United States.
Got it. Yeah, and as you mentioned, being vertically integrated and providing wholesale, retail, B2B, of those three segments, how were you able to identify which made the most sense to expand operationally, and what were some of those challenges as you moved to do so?
Yeah, so as a TSX Venture or now TSX Main Board listed company, we are prohibited from operating activities in the United States that touch the cannabis plant. There's as everyone knows, the challenges that come with the federal law in the U.S., obviously restricting activities around cannabis, whether that be for medical or recreational, versus the state laws where every state is coming up with its own iteration of medical or recreational or both platforms to allow for cultivation, processing, and sale of cannabis products. Again, as a federally regulated business, we are not able to participate in those plant touching activities in the United States. But one thing we are able to do is to enter that market through our B2B segment. We are allowed to sell infrastructure, we're allowed to sell equipment, we're allowed to provide consulting and licensing services to cannabis businesses. So similar to what you will see from other senior U.S. listed companies like Scott's Miracle-Gro, like Agrify, GrowGen, and some of these companies that are participating on the more picks and shovels and supporting product side of the industry, we are able to be federally legal and federally regulated, compliant with our exchange requirements, and also participate in the United States. 2020 was our first foray into the U.S. market. We built out facilities successfully in Michigan and Maine, and now company taking a more focused approach towards the U.S. market. We've now hired a dedicated sales force that is specifically focused on marketing our grow pods and our grow pod product and service offerings south of the border. That was a more near-term expansion for us now here in 2021. I think a lot of excitement across the U.S. in the wake of the most recent election cycle. A lot of excitement around what can that mean for certain bills that have been present at the federal level, the Safe Banking, the MORE Act, et cetera, over the last few years. Are we going to see that accelerated pace toward federal legalization? And obviously, we continue to see that beat of the drum as several states are approaching, again, either medical or recreational legalization over the near term. So, there's significant excitement. There's near-term ability for Delta 9 to participate in that upside in the U.S. market and that expansion. Real business thesis here is simple for our B2B business. We saw in the Canadian market in the lead into legalization, build out of millions of square feet of cultivation capacity, huge infrastructure investment that goes into that type of expansion, huge opportunity then, as we relate that to the U.S. market, for picks and shovels operators to start to see that upside as that significant investment starts to come into the U.S. market.
Got it. Yeah, and you mentioned some of that excitement, with the U.S. capital markets. To say that the activities increased from that of last year is probably a bit of an understatement at best. Companies are certainly excited by that notion of being able to capitalize off the activity, and I know we oftentimes get approached, asking what that pathway is and how you go about becoming listed in the United States. And you touched briefly on some of those requirements. I think it's important to be able to put together that roadmap, highlighting the legal and accounting considerations that could come into play, whether it's upgrading your audits, whether it's a standard conversion from IFRS to US GAAP. But all those discussions very quickly become cost is the big highlighted factor. At least that's what we see as companies are going down that pathway. So as you were going down that same path with Delta 9, how were some of those factors considered? And you briefly touched on, but how are you seeing the benefits outweigh the cost as you went through those efforts?
Yeah, so, as you pointed to, Jamie, I mean, it really is specific to the business, the stage at which the business is at, as they're looking to approach the U.S. capital markets. Again, are you considering more of an OTC listing? Are you considering a senior exchange listing through a NASDAQ or New York listing? Huge difference then in the scope of requirements and costs. While an OTC listing, again, for a Canadian issuer, has relatively equivalent requirements around IFRS reporting, relatively equivalent audit standards, reporting requirements around the timing for quarter end and year end results, annual filings, et cetera, press releases. So for us, approaching the OTCQX market is actually fairly easy. It's right sized for our business, and it gives us that broader exposure to having a U.S. listing. As you start then to entertain, say, a cross listing to a senior exchange like the NASDAQ, it's certainly something our company and many others are exploring. You start to see increased requirements around things like D&O insurance. Significant costs around directors and officers liability insurance when you look to a senior exchange listing in the United States. Considerations around audit requirements. Your auditors are now required to be, I believe it's PCAOB registered. So, a specific registration, which probably means that a more local or regional audit firm is not going to necessarily meet that requirement. What does this mean in terms of listing fees? What does this mean in terms of, I guess then the benefits the company may realize? Obvious benefits to seeing exposure to a senior exchange listing in the United States, being able to access capital and significant amounts of capital. And, we've seen with that wave of excitement that came last fall and into early 2021, it was really the large, for Canadian companies, the cross-listed firms that saw the largest upside in terms of their share price. Companies like Sundial seeing, significant momentum in their equity from having that senior exchange U.S. listing. So it comes with costs. It comes with challenges. It's certainly not something that any company should go down the road without considering that cost benefit. But, I think we're going to see now with that significant excitement that's building towards potential U.S. federal legalization, a wave of companies starting to now list on these senior exchanges in the U.S. And I think we'll see a similar boom to what we saw in Canada, where hundreds, if not more, companies are looking to list on those senior exchanges, tap into capital markets in order to significantly expand their businesses over a relatively short window.
Yeah, thank you. You mentioned earlier about some of the upsides of being listed in the U.S. Could you share from your personal experience some of the upside you've seen in the past, maybe comparing the past 12 months to when you originally listed? Are you seeing a significant difference, and are you expecting that to continue to shift over the next year?
Yeah, so for us on the capital market side, a lot of our focus has actually been on the Canadian side of the border. We see a significant amount of our trading volume does occur on the Canadian, either on the TSX or on the alternative exchanges here in Canada. That's actually something our investor relations team, our executive team have identified as a strategic initiative for the company, is expanding that U.S. capital markets presence. Again, developing a more broad investor base in the U.S., retail and institutional investors, needs to be a key strategy for companies as they scale. Providing more liquidity in the stock needs to be a key consideration. Again, that comes with having a broader shareholder base, and really being able to unlock value for shareholders. Again, I think comes from that participation in U.S. capital markets. Challenges that we've seen on the capital market side, both in Canada and the U.S., are just the overall novelty of the market. Individual retail investors want to participate. Institutions want to participate. But there are restrictions. Certain investors cannot invest in CSE listed companies, or they cannot invest in OTC listed companies. They're really looking to those senior exchanges in order to participate. They're wanting to make sure that they're not offside with federal regulations or restrictions around how they invest or what companies they can invest in, what activities are they investing in. So we're still very early days in terms of the adoption curve for investors in the cannabis space. But to me, therein lies the opportunity for investors to get in early, to do their due diligence. Frankly, this is a new industry. Due diligence is required and certainly encouraged, or it should be. But I think huge opportunity as the industry develops, both from an operational, a regulatory, and a capital markets perspective. This is a generational opportunity as we see legalization of cannabis unfold, not only here in Canada, in the United States, but also globally as well.
Great. Definitely appreciate those insights. And I know we're coming up on time here, so I just one final question for you before we wrap. What words of advice would you give to any other cannabis companies as they are starting down this path, with the excitement and everything we talked about, and ready to jump in very early stage as far as considering what that entry would look like? What would some of those words of advice be?
I think to one of your previous questions, it's really weighing that cost benefit. We saw, back in the early days of industry here in Canada, raising capital privately became very difficult. Often on terms that a company or an entrepreneur, a business owner is not wanting to undertake. Even access to conventional banking, which I know in the United States is a significant challenge. There's a similar hesitancy from investors to really get in to participate on terms that will be agreeable to a business owner. That's where capital markets can actually contribute significant value to your business. Again, it's considering what is the right exchange, what is the right path. Is it a Canadian listing? Is it a junior U.S. listing, senior listing? What are the regulatory implications? Do your homework, get good advice, both audit, legal, regulatory consultancy. It's not an undertaking to be taken lightly. Requires significant investment, time, resources, etc. But if that unlocks value, if that unlocks access to capital, and using Delta 9 as an example, we've raised over $100 million in the last few years to fund expansion of our businesses, and you see that growth trajectory in top line revenue. You see that pivot through to profitability and a positive adjusted EBITDA that's possible for the business. I don't know that happens without access to capital markets. So certainly something that should play, a key role in the strategy for developing companies is, what does that capital market strategy look like?
Great. Well, thank you, John. Really appreciate all of your time today and your insights. It's been a pleasure learning more about Delta 9 and hearing about your experience entering the U.S. markets.
Jamie, thank you very much for having me.
Hey guys, before I let you go, we have one question from the chat I thought I might pose to you really quickly. Let's see, Marcelo. Hi, John and Jamie. Question from BC. Missed recent guidance may have led to drop in DN share price. Please explain challenges DN faces in the near term and what catalysts may grow profitability. Now, John, I know you guys work very hard and you kill it, and sometimes the market just gives you a rainy day, like John Najarian said earlier, right? So anything that you want to respond to Marcelo with here, and obviously the discussion that you guys have had has been really elementary in terms of what's necessary for companies in reporting, but you tell us.
No, it's a fair question. So Q1 this year, we posted a little over 13 million in top line revenue. That was up from 11.6 million in the previous year. That was down from a little over 14 million in the fourth quarter last year. As we pointed to in our earnings call, in our management discussion analysis documents for Q1, Headwinds for industry, challenges on the wholesale side of the business, reorder cycles with provincial wholesale boards was a challenge for us. Retail was a challenge. You see seasonal challenges in retail, obviously January, February shopping. People's wallets are empty. It's cold out. You're not going to see, the retail sales activity one would expect. But the miss for us in Q1 this year was our B2B, our infrastructure segment. I think really a lot of that is fallout from COVID-19. Business investment and business sentiment has obviously trended down or weakened as a result of the pandemic. I think what I would then say to investors is look out for our Q2 guidance coming in the next 30 to 45 days. We feel there's significant growth to be realized in the Canadian and US markets. We're seeing, I would say, increased momentum in our B2B business. Again, look for that guidance and update to come out in the next 45 days. We're feeling quite positive about the growth outlook for the company into Q2 and into the back part of the year. So good question on the Q1. And again, look out and look forward to the Q2 guidance.
John, thanks for answering that, man. I really appreciate it. Jamie, always a pleasure to see you guys. Century kills it on a daily basis for companies in this space. So I really appreciate you being here. And I'm sure we'll hear from both of you again soon.